Today, we're diving deep into the really sudden and pretty shocking departure of Varun Berry, the star CEO who completely turned Britannia Industries around. This is a story that sent some serious tremors through the Indian market, and we're going to get to the bottom of what really happened.
And that's really the big question, isn't it? Why would the leader who took a legendary brand like Britannia and just supercharged it for the 21st century suddenly be out of a job? I mean, his success was incredible, which just makes his exit all the more dramatic.
And wow, the market's reaction? It was immediate and it was brutal. The second that news broke, Britannia's stock just plummeted, wiping out nearly 6% of its value overnight. That single number right there, it just goes to show you how much investor confidence was tied directly to this one person.
Okay, let's get into it. We're going to start with the bombshell announcement itself, the exact moment that sent shockwaves through the entire industry.
The wording itself was so cold, so corporate, and absolutely nobody saw it coming. He was relieved from his services. There was no gentle transition period, no big farewell tour. I mean, one day he's the celebrated leader, and the very next he's just out. You can imagine the statement left investors, employees, everyone completely stunned and scrambling for answers.
Now, to really understand just how big of a shock this was, we have to look back at how transformational Varun Berry's decade at the top really was. We're not talking about just steady growth here. This was a complete and total reinvention of the company.
And this slide, it just lays out the transformation perfectly. I mean, look at this. Before Berry showed up in 2013, Britannia was a company in real trouble. Their market share was slipping, innovation was grinding to a halt, and they just could not crack the rural market. But under his leadership, the company's fortunes did a complete 180. He doubled revenue, launched a whole string of hit products, and made Britannia a household name from the biggest cities to the smallest villages. This timeline really puts his impact into perspective, doesn't it? From joining as the COO to becoming CEO just a year later, the momentum was just undeniable. He doubled the company's revenue in only 5 years, he masterfully navigated that unprecedented demand during the COVID-19 pandemic, and by 2024 he had cemented Britannia's place as one of the most trusted brands in the entire nation. It was just a decade of one win after another.
So, here's the million-dollar question. If everything was going so unbelievably well, why the sudden traumatic change? The public success was crystal clear, but it turns out that behind the scenes, a very different story was unfolding.
Okay, so analysts and insiders are pointing to a kind of cocktail of 4 key factors. First up, strategic disagreements. Berry was all about aggressive expansion into new areas like dairy, but some on the board apparently wanted to hit the brakes. Second, you've got cost pressures. Rising material costs were squeezing profit margins, and the board wanted a swift, decisive restructuring. Third, there's this simple desire for a leadership refresh, the belief that a new era for the company required a new vision. And finally, there was the culture. Berry's intense, fast-paced style, which honestly drove so much of the success, also reportedly created friction with some senior execs who preferred a more cautious way of doing things.
The choice of a new leader can offer some powerful clues about a board's new priorities. And in this case, they didn't just pick a replacement. They picked a very specific kind of executive, signaling a major change in direction.
The new CEO is Rakshit Hargave. He is a highly respected veteran in the consumer goods world, with a serious track record at major companies. But, and this is the crucial part, his reputation isn't built on that same kind of pedal-to-the-metal growth that defined his predecessor.
Now, what's really fascinating here is the skill set you see on the slide. Hargave's known as a turnaround specialist, right? He's an expert in aggressive cost-cutting, and he's a master of premiumization, which is really about convincing customers to pay a little more for higher-end products. Think gourmet cookies instead of the standard pack. His profile screams a shift in focus, from rapid top-line expansion to bottom-line efficiency and profitability.
So what does this shift from a growth-obsessed CEO to a margin-focused one actually tell us about where Britannia is headed? It really seems like the board is getting ready for a whole different kind of fight.
And this slide right here, it captures that pivot perfectly. The Berry era was basically a sprint, all about aggressive expansion and scaling up as fast as possible. The new mandate under Hargave looks a lot more like a marathon. It's focused on cost control, improving those profit margins, and premiumization. Britannia is essentially trading in its sprinter shoes for a marathoner's discipline.
This whole saga is just such a powerful reminder of a fundamental truth in business. You know, those glossy annual reports in the rising stock prices, they don't always reflect the internal pressures, the debates, and the conflicts that are happening behind the closed doors of the boardroom.
And that leaves us with the ultimate question. Is this a shrewd, necessary course correction to get Britannia ready for its next decade of challenges, or is it a colossal mistake to get rid of a leader who delivered such unprecedented success? I guess the next 12 months of performance will give us the answer, and it will determine whether this incredibly bold move secures Britannia's dominance or signals a brand new era of struggle.